Good morning, everyone, and welcome. Today, we're diving into the world of comprehensive forensic accounting and fraud examination. This presentation will take us through an in-depth study of various types of fraud, the techniques used to detect them, the legal frameworks that govern these practices, and the professional standards we follow. I'm excited to explore this critical field with you and shed light on how forensic accounting plays a vital role in uncovering financial misconduct. Let's get started. Forensic accounting is a unique field that blends accounting, auditing, and investigative techniques to analyze financial information, especially when fraud is suspected. This skill set is becoming increasingly important because both public agencies and private companies face more regulatory oversight and complex fraud cases than ever before. To prepare you for this growing need, this course offers a self-study format, allowing you to learn at your own pace, and it concludes with a thorough final exam designed to test your understanding and mastery of the key concepts. Fraud is essentially intentional deception designed to secure personal or financial gain. It's important to understand that fraud doesn't happen in a vacuum, it thrives in certain environments. These are usually places where internal controls are weak, where there's significant financial pressure, or where individuals have easy access to assets. This can be in corporate finance, government agencies, or even nonprofit organizations. By recognizing and understanding these environments, we lay the groundwork for effective fraud examination, making it easier to detect and prevent fraudulent activities. This understanding is crucial if we want to stay one step ahead and protect our organizations. When it comes to fraud schemes, there are four main types that we need to be aware of. First, we have fraudulent financial statements. This involves manipulating accounting records to give a false impression of an organization's financial health, often to deceive investors or creditors. Next is asset misappropriation, which is essentially the theft or misuse of the company's assets. This could be anything from cash to inventory. Then we have corruption, where individuals abuse their power for personal gain. This often includes activities like bribery or conflicts of interest, where decisions are influenced improperly. Lastly, money laundering is a process where illegally obtained funds are disguised to appear legitimate, making it difficult to trace the original source. Understanding these categories is crucial in identifying and preventing fraudulent activities. Fraudulent financial statements occur when someone intentionally falsifies or alters financial reports to mislead stakeholders. This kind of fraud can take many forms, but some of the most common methods include overstating revenues to appear more profitable, understating expenses to reduce apparent costs, manipulating journal entries to hide discrepancies, or even omitting liabilities to present a stronger financial position than actually exists. Examples of this type of fraud are fictitious sales, where sales are recorded that never happened, recognizing revenue too early before it's actually earned, and improperly valuing assets to inflate the company's worth. Detecting these schemes isn't simple, it requires a thorough and careful review of accounting records and transactions to spot inconsistencies and signs of manipulation. Asset misappropriation refers to the theft or inappropriate use of company assets, which can include anything from cash and inventory to equipment. Common tactics used by perpetrators often involve embezzlement, making fraudulent disbursements, manipulating payroll, or directly stealing inventory. To detect these activities, organizations rely on methods like surprise audits, thorough reviews of transactions, and maintaining robust internal controls. It's important to note that asset misappropriation is actually the most frequently encountered form of fraud within companies. Understanding these key points helps us better protect our resources and maintain the integrity of our operations. Corruption fraud happens when people use their power or influence in business deals to gain something for themselves. It's important to recognize the common ways this shows up, like bribery, where someone offers or accepts something of value to sway decisions, kickbacks, which are secret payments for preferential treatment, conflicts of interest, where personal interests clash with professional duties, and extortion, involving threats to obtain benefits. The impact of corruption is serious. It undermines the trust and integrity of organizations, disrupts fair market competition, and can lead to huge financial losses. To detect corruption, we need to carefully examine the relationships involved, review who is approving transactions, and track the flow of money for any irregularities. This vigilance is key to preventing and addressing corrupt practices. Money laundering is the process of taking funds that were obtained illegally and making them appear legitimate. It generally happens in three key stages: placement, where the illicit money is first introduced into the financial system; layering, which involves complex transactions to obscure its origin; and integration, where the cleaned money is reintroduced into the economy as if it were legal. Forensic accountants play a crucial role in detecting money laundering by carefully analyzing unusual transactions, tracing the flow of funds, and identifying inconsistencies in financial documents. Having a solid understanding of how money laundering works is critical not only for staying compliant with regulations but also for actively preventing fraud within organizations. When responding to fraud, it's crucial to operate within established legal frameworks. This not only ensures that investigations comply with all relevant regulations but also that any findings are admissible in court. Key legal considerations involve adhering to laws surrounding evidence gathering, respecting privacy rights, and fulfilling reporting obligations. Forensic professionals play a vital role in this process. They need a solid understanding of the legal environment to properly collect, preserve, and present evidence during fraud examinations, ensuring the investigation holds up under legal scrutiny. When we talk about document analysis, the first thing to understand is why it's so important. Financial and business documents can hold the key to uncovering signs of fraud, so digging into them carefully is essential. One major step is verifying the authenticity of these documents to ensure they are genuine and haven't been tampered with. We also need to look for any alterations or inconsistencies by comparing entries across different documents and tracing transaction histories. This detailed examination helps us spot anomalies or falsifications that might indicate fraudulent activity, making document analysis a vital tool in fraud detection. When conducting fraud examinations, effective interviewing is absolutely crucial. It allows us to gather essential facts and verify evidence, which lays the foundation for the entire investigation. To do this well, we need to plan our questions carefully, establish a good rapport with the interviewee, and pay close attention to nonverbal cues. These can often reveal more than words alone. Another key aspect is documenting the responses systematically. This detailed record-keeping ensures that no important information is lost and supports the integrity of the investigation. Ultimately, skilled interviewing not only helps us uncover critical details and confirm suspicions but also secures witness statements that are vital for a comprehensive and credible examination. When it comes to report writing and communication, clarity and accuracy are absolutely crucial. A well-written report allows us to convey our findings clearly to all stakeholders, ensuring there's no room for misunderstanding. Effective reports are not just about presenting information, they need to be well-organized, objective, and backed up by solid evidence. This structure helps readers follow the logic and trust the conclusions. Beyond the written word, communication plays a key role in making sure that legal authorities, management, and other decision-makers fully grasp the results. Without this, even the most thorough report might not have the impact it deserves. When it comes to fraud examinations, core auditing skills play a crucial role. Techniques like completeness testing, transaction tracing, and independent verification of records are essential tools in detecting potential fraud. By applying these skills, we can confirm the accuracy of financial data and spot any discrepancies that might indicate wrongful activity. Essentially, auditing provides a systematic and methodical approach, allowing us to uncover fraudulent actions in a thorough and reliable manner. This structured process is what makes audits such an effective safeguard against financial misconduct. Computer forensic specialists play a crucial role in fraud examinations by retrieving and analyzing electronic evidence that might otherwise be overlooked. Their expertise goes beyond simply finding files. They are skilled at recovering deleted data, tracing digital footprints, and ensuring that the data remains secure and unaltered throughout the investigation process. As technology becomes more intertwined with fraudulent activities, the importance of these specialists continues to grow, making them indispensable in today's investigations. Their ability to navigate complex digital environments helps uncover the truth and supports the overall integrity of the case. Maintaining thorough documentation and a clear chain of custody is absolutely vital to preserve the integrity of evidence. Every step in handling the evidence must be carefully recorded to ensure nothing is lost or tampered with along the way. This meticulous record keeping is not just about organization, it plays a crucial legal role. Proper documentation boosts the credibility of the evidence and helps ensure it is admissible and trusted during legal proceedings. Without this, the entire investigation could be compromised. Forensic accounting is becoming increasingly important because more regulations are being put in place and fraud risks are rising. This creates a growing number of career opportunities for those with expertise in this field. The demand for forensic accountants isn't limited to one area, it spans public accounting firms, law enforcement, government agencies, and private companies. What really makes a difference are the essential skills these professionals bring, especially their ability to examine and detect fraud. This expertise is crucial for protecting valuable assets and ensuring organizations stay compliant with laws and regulations. Throughout this course, we've explored several important topics, including the different elements and types of fraud, various investigative techniques, relevant legal considerations, and how to effectively write reports. To get ready for the final exam, I strongly encourage you to go back through all the reading materials and complete the supplemental activities. These resources are designed to reinforce what you've learned and help solidify your understanding. Preparing thoroughly is key, especially since this is a self-study course, and being well prepared will greatly increase your chances of success on the final exam. Remember, careful review and consistent practice aren't just about passing the test, they're essential for applying this knowledge confidently in real-world situations.